Every party has one person nobody asks a follow-up question to. You ask what they do, they say four words. I run a laundromat, commercial pest control, or I own vending machines, and the room moves on to someone more interesting. That person is statistically more likely to be a millionaire than almost anyone else in that room. Quick question. Why does that keep happening across completely unrelated industries and completely unrelated cities? By the end of this, you'll see it's not a coincidence. It's a mechanism. And once you see it, every boring business you walk past starts looking different. We've all absorbed the same story about getting rich. Build an app, launch a brand, spot the next big thing before anyone else does. It's the plot of every founder's thumbnail on your feed. Here's what it leaves out. The moment an opportunity looks exciting, it's already crowded. Excitement is the fastest distribution system on Earth. It spreads through pitch decks and group chats, and everyone it reaches becomes someone competing with you for the same upside. But here's the strange part. The businesses that actually make the most unremarkable looking money are hiding in plain sight, and some of them are massive. Waste management, literally garbage trucks, is worth more than most airlines. Cinta is a company that rents out work uniforms and cleans floor mats, is worth over $70 billion. Rollins, the parent company of Orkin Pest Control, is worth more than Nike traded at for most of the last decade. None of these companies have a founder story you'd repeat at a dinner party. None of them needed one. Excitement is a tax the market charges you for paying attention. So if the money was never hidden, what was? In 2019, a small coin laundromat outside Cleveland sold for $410,000. Monthly cash flow around $9,000. No pitch deck. No investors. The buyer wasn't a laundry enthusiast. He ran the cash-on-cash return through a spreadsheet, and it beat almost every exciting asset he'd looked at that year. Self-storage facilities post average operating margins north of 40%, higher than most software companies claim on a slide, minus the burn rate. Vending routes routinely return 20 to 30% a year on the machines alone. None of this is secret, it's in public filings. Here's something almost nobody notices. The profitability was never the obstacle. The obstacle was that nobody wanted to be the person who owns the laundromat. The business was available the entire time. The ego wasn't. Let's test this. Picture a portable toilet rental company next to a crypto exchange launch party in 2021. One of them, nobody wants to run. The other had people quitting stable jobs to chase it. Guess which one is still standing uneventfully profitable in 2026? While several exchanges from that exact year have since collapsed, been fined, or gone quiet. Three traits show up every time money hides in boredom. The need is essential. People don't stop needing clean clothes or working pipes during a downturn. The demand is recurring. It's a subscription nobody calls a subscription. And the appeal is low, which is the variable everyone underrates because low appeal is what keeps the field empty. Wealth doesn't care if you're impressed by it. It only cares if you show up. But here's where almost everyone misdiagnoses the whole idea. We'll come back to why in a second. First, watch what actually happens to the money. The laundromat was never an asset. Neither is the vending route, the storage units, or the pest control truck. Those are containers. The asset is what the owner does with the cash the container produces every month. Here's the part that gets skipped. The first boring business rarely makes anyone rich on its own. What compounds are refusing to spend that monthly cash flow on a better life, and instead are buying the next boring thing with it. One documented case, a laundromat operator in Texas used the cash flow from a single store to acquire two more within 4 years, then leveraged all three to buy a small commercial cleaning contract company. That cleaning business now generates more revenue than the original laundromats combined. That's not luck. That's compound interest, wearing a uniform instead of a ticker symbol. Here's the strange part, though. This exact playbook is how some of the biggest boring public companies got built in the first place. Cintas didn't start as a $70 billion company. It started as a single industrial laundry service in Cincinnati in the 1930s, reinvesting cash into acquiring the next unglamorous laundry route, then the next 4 decades, while nobody was watching. The mechanism that built a laundromat portfolio in Texas is the same mechanism at a different scale that built one of the largest uniform companies on Earth. which raises an uncomfortable question. If the math is this repeatable, why doesn't everyone do it? Picture two 25-year-olds with identical savings. One finds an opportunity with a growth story, the kind of thing that gets a reaction when you say it out loud. The other finds something almost embarrassing to mention. Neither can predict the future, but one of them just chose a game where the field already filtered itself down for them. Here's why we keep choosing wrong. You only ever hear about the exciting bets that worked. The failed startups and the tokens that went to zero don't get a video made about them. You're pattern matching off a rigged sample, and the sample is rigged by what's fun to talk about, not by what's true. I'll admit where I sat on the wrong side of this. I once turned down a stake in a small, unglamorous laundry and storage operation, not because the numbers were bad, they weren't, but because it wasn't a story I wanted to tell at 24. What I actually gave up was years of compounding I will never get back. That's not a hypothetical regret. That's a number I could calculate and mostly choose not to. Nobody gets rich trying to look rich. Here's where that line gets more literal than it sounds. Status is rented. You pay for it with attention, and the lease ends the second people stop looking. A laundromat doesn't need anyone to notice it. It runs at 2 a.m. on a Tuesday, whether or not a single person walks past and thinks it's impressive. What happened next surprised even people who'd studied this. Researchers looking at self-made millionaires have repeatedly found that most of them didn't work in glamorous industries at all. Scrap metal, pest control, vending, cleaning contracts, auctioneering. Unremarkable, cash-generating, undesirable to the average person work, done consistently for a very long time. Here's the twist most people miss entirely. The exciting business and the boring business can generate the exact same amount of money, and only one of them lets you sleep. Because one requires the market's ongoing approval to keep existing. The other one doesn't ask permission from anyone, including trends. I'm not going to hand you 5 businesses to copy tomorrow because the list isn't the useful part. The filter is there. Next time you spot a gap, run 3 questions on it. Is it essential, not optional? Does it recur, not happen once? And is it undesirable enough that other people are skipping past it for the same reason you almost did? That intersection, essential, recurring, undesirable, is where margin sits completely undefended in public, in filings anyone can read. Here's the part that should genuinely bother you. The cost of waiting isn't the money you didn't make. It's the compounding you'll never get back. Every year spent chasing the impressive version of an idea is a year the boring version doesn't get to work for you. So here's what's actually worth sitting with. And it's not the laundromats. Every business in this video was making its owner rich in plain sight, in public numbers, for as long as you've been alive. Nobody hid it from you. You hid it from yourself the moment you decided that what you build has to say something about who you are. That belief that your income needs to double as your identity might be the single most expensive financial decision most people never realize they're making. It's not a lack of opportunity. It's a subscription to being impressive that you never remember signing up for, and it's been quietly billing you your entire adult life. You don't need a better idea. You need to stop needing people to be impressed by it. The boring path was never hidden. It was just unattended, because everyone else was too busy looking for something better to say out loud than the truth.